And let's take a look at the trading strategy itself in more detail. Okay, so we are in early at that white little line, 30,200. There has, of course, been EB 1, 2, and a 3. There's going to be a 4, there's going to be a 5. This is a triangular structure. This is an EBCA. We get the B. We can even go all the way to 31,000. Don't be surprised. So we are in good control because we have only half size. If we're loaded, we will be in trouble. We'll feel stressed, we'll feel out of focus. But now, because we know at which level we are, expect to know at which level we are midway in the correction, and therefore we don't want to hold that position. We want to get rid of that position, that long position, at the profit, because we can still get lower positions, lower entries. Now remember, this is the 3. We get a wave 4, which was maybe 38.2% at least, 30,680, 23.6%, 31,000. I would take this personally to 30,900. If I'm 30,500, I'll take it to 30,900. Close out. Right, this is still gonna. I expect another correction down to where I was going to buy my other half size, 28,400, 20,000, 7,800s, right? Maybe even 27,000. Every day, in order to do a good entry, I would use S2 levels and S3 levels for the day. Once I close my current entry, now there is really no need for it. We were thinking maybe this market will make a surprise move higher. That's why we made that higher entry of size at 30,400. Now there's no more use for this. So this entry today comes in on that 15-minute chart at S1. You can see that support 1 right there. On a bounce, of course, we're going to retest S1. We go 50% between S1 and the pivot, 30,600. We go to the pivot, 31,000. We just want to take profit at 61.8%. Actually, the proportions are very important. It's just 61.8% between the pivot and S1 with a take profit. We will not do sells, even if it is possible that the market is bearish. From all the reports that we'll be hearing, the market should be bearish. So 61.8% is 30,007. Place a take profit there. Small profit, but sufficient to close out that position. Right? We could consider we have been doing sells. Now we stand out of sells because they did not work. We have first-hand experience in this. We have been selling into that shoulder for over 2 weeks and it doesn't get us anywhere. We expect there is market reversal from the current cycle structure. We could be mistaken. Yes, but if we are mistaken, we're going to see a very strong degree 3 on high degree time frame, the 1 hour or intermediate degree time frame, the 1 hour and 30 minutes. This is a 15 minutes. We have a degree 3 here, yes. But this is not really degree 3, this is a degree A. I believe we're going to get another degree B, even 31,000, then another degree C. This has been going on for ages. So many cycle extremes. It's normal we get another cycle extreme. It was a degree C at that point. And then we had a 1, 2, and a 3, and we had another cycle extreme. We have a 1, 2, and a 3, we have a cycle extreme. No problem. There is really no problem. It's not a matter of if it's a problem or not. It's really a matter of just understanding the structure and acting as planned. Very important to act as planned and not lose our nerve. If we are in the correct size, we don't lose our nerve. If only half size here, you're only long half size long at 30,500, you're able actually to go to 31. You're able to go to 30,900. Right? And then buy again using the same momentum cycles. If we get a breakout higher, like we have, all right, then great. If you're not looking seriously at the market and at the station, and you're a bit of an aggressive trader, you would consider that this bounce is here, and we're still bullish. Okay, so you were a bit aggressive doing such a high entry just because of this. The bounce this is a cycle extreme, the end of the correction, maybe, but we need confirmation, momentum confirmation. Momentum confirmation is that it could be finished, even if we're not seeing the positive momentum to take it out. Right? Remember, we have already finished 40 and 40. The market wants you to think to dump all your longs. This is even going to get more ugly. Could get another strike down, but for sure, there has been quite a strong correction. This is an A and a B. C doesn't have to end here. Right? And the B doesn't have to go all the way down to these levels 28,300 and 27,700. It's possible to play safe on a bounce. Yes, I would even play safe and close at 30,900, 30,700, where we were looking. We get that level easy because you have a head and shoulders. So you get these shoulders, even 31,500. You get that level, you close out. But what if the market goes higher? If you play safe, we are safe. Okay, we have not incurred any losses. We have not really made much gains. All right, and the market breaks higher. Just wasted resource and wasted a good entry. If the market breaks higher again, no one actually will know. It will be sudden. You're looking at 34,000, you're looking at 35,000, you're looking at 36,000. Okay, so now it really depends on if you want to go on a confirmation at these levels. Of course, it is possible, but it's also maybe not possible. It will be a sudden breakout high. By the time you get the confirmation, it will never appear on a 1 hour chart. You would have both already a cycle extreme, negative cycle extreme on the 1 hour chart. It will only appear on the 5 and the 15 minutes. And by that time, you're on 33,000 and 34. You're already in doubt. You have to wait for a correction to buy into. Actually, the profit margin is no longer that good from 33,000 to 36, just $300 per 1/10 of a coin. You get my meaning. I'm sure everybody gets my meaning. So yes, we have to incorporate additional risk, but again, I don't want anyone to be uncomfortable with what they're doing. If the current move is risky, it will be risky, and that's why we are in a half size. Okay, so it depends on the kind of risk appetite that you have. You can consider to hold. Right? We should be seeing 35,000 and 36,000. We are now almost confirmed that this is not going to be a bear flag. It's going to be higher head and shoulders if this was a correction. All right, because of the cycle structure, if this was going to be a bear flag, you would not really be seeing strong positive momentum on the one or breakout momentum. What we have now, we were showing yesterday on the 4 hours is called breakout momentum on the 4 hours on the 1 hour. So you don't get that in a bear flag. Possible, but you don't. All right, so this is that same bear flag on the 4 hour charts. We have breakout momentum. Breakout momentum here gives you a new head. It's not a bear flag. Right? This is the trigger with the book. So we had the same breakout momentum earlier. It gives you higher hits, newer hits. Right now, always momentum actually leads price. So what you get to see in momentum is going to reflect into price. If it's going to reflect into price, you get here another higher headed price. We don't have any higher heads so far, we just have shoulders. We have two shoulders. We should get not even a higher head, any head, any kind of head is 36,000. If you get a higher head, let's not be very optimistic. But really, any head takes you to 36,000. It's going to be sudden again and strong, and the whole position will be over in 1 day. If we're not in at the right level, we're not in. We just can't be. Okay, so we have to take the risk. That's my personal take on it. Again, that C can give you a head. It's only half size, so the risk is somewhat contained. We have a boundary of a wedge structure. Even going down to 18, that level, 28,000, you really are still at the lower boundary of the wedge structure. Right, so we would then consider to hold if you think it is prudent, if you are comfortable. If you're not comfortable, I would consider to close out half of that half. So maybe some of us are holding very strong hands, right? Okay, so we close half of, supposing I was holding 1/10 of a coin and 2/10 of a coin, and this is actually my half size. I would close 1/10 at 30,900 and let the other 1/10 run, because the market can really surprise us and we're going to be moving high. We're looking at that ending diagonal here. We're broken out of that ending diagonal. In order to fall back and say this is not a valid breakout, so this is not a valid breakout, you need to break below the lower boundary of that ending diagonal, 27,875. You need to see degree 3 momentum at least again on the 15-minute chart and on the 30-minute chart if you're going to be doing another wave. Full B down. We know this is a 5 now. This is what this kind of momentum shows you. This is a 5. This has been rising. So this drops up here. So we have a 4A and 4B and the 4C. Maybe, all right. We understand the structure, just want to take advantage of it.